wholesale capital markets, our stock markets. You name it, we're looking at it to see how we can ensure that we have the most competitive and dynamic financial services industry in the world, because that's how we'll deliver on what you're asking, Venkat. It's how we'll make sure that the billions, if not trillions of pounds of capital that exist can all be invested in those companies to make sure they can deliver growth and jobs here in the UK. It's one of the fantastic opportunities of Brexit. We are seizing that opportunity and working with you. That's how we're going to fuel the growth of the future. Right.
Well, we'll leave that event there for now. If you want to continue to watch the Prime Minister being questioned by business leaders, you can do so by scanning the QR code on the screen right now, and that will take you to our online and digital platforms. In the meantime, I'm going to go back to Maurice Button, the organiser of City Week. Of course, Maurice, very interesting there. The first question was from CS Venkat, the Barclays Chief Executive, all about financial services. Did you take any encouragement from what you heard there?
Well, I think the Prime Minister, generally speaking, was being very pro-business, and it's important that he should be. I mean, the roads and the hospitals and the social services the country needs come from a successful economy, a growing economy, one that's not too fettered by undue regulation and so on. So I take great comfort from that. And of course, financial institutions and financial services drive the economy. They finance the real economy. So anything which is pro-business is pro-financial services. We welcome that.
Worth pointing out, financial services employment is actually up some 45,000 since before the pandemic. So it's a sector that's thrived pretty well regardless of the broader backdrop.
Yes, it is, because it's extremely international. So whilst there's a very strong domestic financial services industry, here in the city, everybody prides themselves on how international their services are. And it's one of the largest exporters of financial services in the world.
Do you think the public, the country as a whole, I mean, you mentioned that this event was launched in the aftermath of the financial crisis when, let's face it, the banking sector in particular was in the doghouse. Yeah. Does the broader public appreciate the importance and strength of the financial services sector, do you think?
I'm not sure that they do, and that's really as a matter of education and communication. And perhaps financial services could do a better job in that regard.
What about digitalisation in particular? I mentioned AI, machine learning. I mean, these are all things that the industry is having to think about very carefully. Where is the UK compared with some of its global peers on this?
I think on digitalisation, there are two parts to it. If you're talking about digital assets, I think the UK is a leader in digital assets. We have a thriving industry. Tomorrow will be devoted to digital assets, and you'll be surprised to see the level of adoption from conventional, if you like, financial institutions. We get tokenisation, the fractionalisation of ownership of assets. Then there's the broader issue of the impact of things like AI, and in due course, quantum computing. And later on from that, quantum-powered AI, which is, I don't think anybody fully understands the implications of that yet.
Yeah. Before I let you go, Maurice, obviously you've got hundreds of delegates here today. Are you hearing much about the CBI and its current woes? Is that something on people's agenda?
Well, it's early days for discussions about that here, in that we're only a couple of hours into the event. But generally speaking, I think people take a very negative view of what has happened at the CBI, understandably, and it's totally shocking.
Do you think the CBI has a future?
I think it's very hard to speculate on that. I think if there's a clear out of the top management and a relaunch of the CBI, then I think it has a future. But failing that, people have questioned whether there is a need. We have quite a few other representative bodies. Who knows? Not least the City UK for the financial services sector. Maurice, appreciate you joining us today. Pleasure. Thank you. Thank you very much.
Some of today's other business news stories now, and some of today's other stories now. As just mentioned, the new Director General of the CBI starts work today as the organisation seeks to stem the flow of the organisations leaving it, either cancelling their membership or pausing their involvement with the employers' organisation. Well, Rain Newton-Smith was the CBI's first chief economist, but she left last month to take up a senior role with Barclays, a clutch of companies including Aviva, NatWest Group, the John Lewis Partnership and Kingfisher all cut ties with the CBI on Friday following a second rape allegation being levelled at CBI employees. Well, the organisation is expected this week to respond to a report by Fox Williams, a law firm that was commissioned to carry out an independent investigation into the allegations. Credit Suisse suffered outflows of 61 billion Swiss francs, some £55 billion worth of withdrawals during the first 3 months of the year. The money was pulled by both depositors and clients of its wealth management arm as concerns over its financial health grew following the collapse of the US lender Silicon Valley Bank. Well, Credit Suisse, which has since been rescued by its larger rival UBS, said that the outflows had moderated but had not yet reversed. The healthcare services provider Medica Group, which supports hospital radiology departments, has become the latest London-listed company to agree to a takeover by a private equity buyer. It's agreed to a takeover by IK Partners, the private equity firm specialising in investments in Northern Europe, in a deal valuing it at £269 million. Well, Medica, which was founded in 2004 and which floated on the stock market 5 years ago, is a specialist in teleradiology, the transmission and display of radiological images, such as CT scans and X-rays, in a location independent of where the patient is situated. And the average sum being required of a first-time buyer has risen to a record £224,963. It emerged this morning. That was up 2% year-on-year and up 0.2% on last month. Well, the figures were published by the online property portal Rightmove, which revealed that the asking price for an average home is now £366,247. Well, that was up 1.7% on last year and up 0.2% on last month. Rightmove said the increases were lower than were typically seen at this time of the year. Now, one of the key themes at City Week is digital assets, and in particular how the potential of emerging digital asset ecosystem can be fully realised. Well, joining me now is Barney Reynolds. He is the global head of the financial services industry group at the law firm Shearman and Sterling. Barney, good to see you this morning.
Good to see you too, Ian.
All of the media noise is around cryptocurrencies, but digital assets is actually much bigger and much deeper than that.
You're right, it's a vast arena. Basically, every existing financial asset can be digitised, and is being digitised. And in fact, you can digitise any legal entitlement at all and trade them. So interest in properties, cars, rental homes or whatever. So it's a very exciting development.
Now, at the centre of this, in this country, is the Bank of England looking at a central bank digital currency, sometimes referred to as Bitcoin. Do you think this is going to happen?
It might. They're looking at it carefully. I mean, essentially, the thing that they're trying to solve for is the digital world needs an on-chain digital payment instrument. And it might be that the central bank needs to step in and offer its own in order to continue its control of the currency and managing the value of sterling. Alternatively, there are various other solutions private sector solutions that may prevail.
Do you think these central bank digital currencies can coexist with crypto?
I do. I don't see why not. I mean, I think if it's properly managed, a central bank digital currency will provide a stable payment instrument for the market and be quite attractive. Now, obviously, there are issues that come with that, privacy being a well-known one, and also, it effectively potentially puts the commercial banking sector at risk of a flight by depositors to the central bank digital currency, because obviously that's safer issued by a central bank rather than by a commercial bank. So there are some big issues to be navigated around that.
Well, quite so. I mean, you don't really think that this poses a threat to financial stability, though, if it's handled in the right way?
Not if it's done in the right way, and that's what the thinking that's going on is all about.
Has the UK lost any ground here? I mean, for example, the People's Bank of China already has their CBDC up and running. Right,
in trial. I mean, yeah, to some degree. I mean, I don't think there's ground lost, no. I mean, the US hasn't introduced one yet. ECB is proposing to, but we're not, I don't think, meaningfully behind it. I think it matters. I think the main thing is, if we do it, to do it right.
And what about the regulatory environment? Where would you put the UK in that regard?
Well, there we have a fantastic opportunity, because a lot of the world's mucked up on digital assets. I think the first phase of digitization has been marked by businesses using offshore centres, offshore financial centres in the Caribbean and around the world. And in the case of FTX, the blow-up of FTX, the sort of credibility of those zones is somewhat in question. And in the FTX, the US had sort of essentially allowed its legal system to manage FTX, and there was an onshore FTX business in the US. We hadn't allowed them into here. So they're sort of bruised by that, and the credibility of the US system is somewhat in question. Yeah. So the opportunity for us now is to come up with something that is like a magnet, which plays on the fact that we have the most trusted legal environment and regulatory system globally. So everyone will wish to come here and set up here. And I'm hearing that from the market, I'm hearing that from clients.
That's good to hear. What are going to be the challenges, though, in getting there?
So it's a difficult thing to do. It's deceptively, I mean, our system is deceptively simple, and that's, you know, in a way it's genius, but it's very hard work to make it work well. The government are already consulting sensibly on it. The Treasury have got a very thoughtful paper out. But there's a lot of work to be done, which is mapping the digital assets out there in the world in sort of real terms onto our concepts of regulation, and then adjusting our concepts to fit properly, which will mean stripping away some rules where digital assets get rid of risks that exists in traditional form, and also adding some rules where digital assets create new risk. And that tailored approach really is something that the UK is going to excel at, and it's already starting to happen. The good thing is, others who've been trying to do it haven't done it in a very sophisticated way. So the EU, for instance, has got something where they've introduced sort of concepts from a library, e-money tokens and asset reference tokens, which, you know, bring into play all sorts of debates about what's in them and what isn't. The genius of our system is to take simple concepts and map them in a much more intuitive way. If we do it right, it'll be fantastic, and I think we can.
Good knows on which to end. Barney, great to see you this morning. Enjoy the rest of City Week.
Thank you.
Still to come here on In King Live. We're going to have a look at how global markets are doing this Monday morning. Don't go away.
And now it's coming from both sides, and it's moving this way. Clearly not had very much to eat at all, a lot of them extremely thin and very frail.
The people here are praying quietly to themselves.
I'm Alex Crawford, and I'm Sky's special correspondent based in Istanbul. Now they're trying to finish the job off so that they can move into the square.
Okay, it's okay, don't worry, it's okay.
They're becoming very sensitive about having the media around. They have no protective masks or protective equipment at all. We aim to be the best and the most trusted place in news.
Every time they touch them, they spray.
This is the cocktail of drugs which the doctors at this hospital have been giving their coronavirus patients, made for people who want clarity in an uncertain world.
Perilously close to the vineyards.
I can't imagine how much plastic is lying at the bottom of this huge lake.
Well, equity markets in the Asia-Pacific region had a mixed session overnight ahead of what is going to be a big week for corporate earnings. Only Mumbai and Tokyo posted gains across the region overnight. Well, in Europe, stocks have similarly had a fairly muted session so far this morning and remain largely in negative territory. Here's the current picture. Talking points in Europe this morning include Philips, the Dutch healthcare technology specialist, is ahead by some 10% after its first quarter earnings came in ahead of expectations. Well, here in London, the FTSE 100 is also in negative territory right now. Not a great deal going on, really, to be honest with you. Some of the mining heavyweights dragging on the index, in fact, following a decline in metals prices. Leading blue chip gainers this morning, though, again, for is Dowlais Group. The car parts maker is ahead some 1.75%. That's as its shareholder register continues to evolve following its spin-off last week from Melrose Group. Other leaders in the FTSE this morning include the medical equipment supplier Convatec. And that was following news last week of an acquisition in the technology space that seems to have gone down quite well. Outside the FTSE 100, well, again, there are not that many stories for traders to get their teeth into right now, but ASOS, the online fashion retailer, its shares are off by some 2% right now. That's following press reports that it's being targeted by a well-known short seller. Foreign exchange markets, well, again, it's actually quite quiet. Not an awful lot of volatility right now, and certainly not much movement among the main currency pairs. Sterling up 1/5% against the US dollar, more or less unchanged right now against the euro. The single currency, meanwhile, is ahead by 1/4% against the greenback. As for the oil price, well, that's been drifting this morning on continued speculation about what rising interest rates are going to do for global growth. Brent crude has been trading this morning at its lowest level since the 31st of March. Currently, a barrel of Brent crude will set you back $81.38 a barrel. That's off 1/3%. Well, with me this morning is Janet Murray. She's head of market analysis at Brewin Dolphin. Janet, great to see you. A lot of profit warnings out lately, many of them from the tech sector.
Yeah, hi, good morning, Ian. Thanks for having me here. Yeah, indeed, there has been a number of profit warning from companies, especially for the tech sector, and primarily the reason is because of economic uncertainty. So there was a survey out today by EY, and the companies were citing that there is so much economic uncertainty, and that's why a lot of businesses are pulling out their contract, putting it under review, or canceling it altogether. And that, of course, will have an impact on the businesses of these companies, especially the tech, software companies, because these businesses are quite cyclical. So when there's an economic downturn, the first thing that company usually cut is advertising or spending on tech, investment, etc. So that's why we're getting more and more of that profit warning now.
It's quite interesting that you're talking there about the fundamentals of the businesses, because obviously there was a big sell-off in tech last year that was largely driven by higher interest rates, and that obviously changes the way that investors look at future cash flows.
Absolutely. I mean, what I mentioned was the economic uncertainty. Of course, high interest rate has a role to play in that, because ultimately high interest rates would make an economic slowdown more likely, and of course it really puts funding pressure on the company. So the companies cited in this survey also said it is getting harder and harder to get access to funding, especially for smaller tech companies. So that's why I think it will be quite a difficult, challenging environment for these small and mid-sized companies trading in the UK.
That's a huge week this week for corporate earnings. I mean, we got off to a reasonably good start Q1 earnings season. What are you going to be looking at for this week?
Well, this week is a huge earnings week for the UK, for banks. Basically, we have most of the large banks in the UK reporting. And of course, I think most people will be watching for the net interest rate margins, how sustainable that is going to be. Of course, the guidance on that going forward, because we had a pretty good run in terms for banks, in terms of their profitability. But that is likely to be challenged given that we are having the squeeze in the margin going forward because the bond yields have gone lower. And of course, the access, as I mentioned, the access to credit is getting more and more difficult. So I think that would be a key thing to watch, and whether these banks will be tightening their lending standards to the businesses.
What's really struck me, though, thus far, earnings have actually been pretty good, and particularly, you look at something like Philips today, the share price up 10%. So investors have been a little bit pessimistic in terms of the outlook at times, it seems.
Yeah, I think that the fact is a lot of people are worried about the economic uncertainty, and certainly the earnings growth expectation have been dialed back, consistently. So I think the expectation has been lower, so it is relatively easier to beat the forecast. Of course, it is still difficult, but I think because people have already lowered the expectation. But ultimately, I think the sentiment out there is still pretty doubtful. There is a rally year to date, but I think a lot of analysts out there are saying that this is not sustainable because we are likely to see more economic slowdown. Economic data has been resilient and better than expected, but who knows? Because we have still to observe the lagged impact of interest rate rises, and of course the impacts from all these banking stress that we have experienced, which may not be visible yet.
Yeah, now energy is obviously always close to people's thoughts right now. The story caught your eye this morning about a big Anglo-Dutch initiative.
Yeah, so the government has announced that they will have a cable underneath the North Sea connecting the UK and the Netherlands called the Line Link. So that would basically link the offshore wind farms in the North Sea and connecting the electricity generated between UK and the Netherlands. So it will increase the current UK electricity generation capacity by 20%. But that is likely to start, I mean, the project is only going to be completed maybe in 2030, so there's still some way to go. But it's a great step in the direction in terms of longer-term energy security and, of course, the transition to net zero.
And while I've got you, Janet, obviously we had quite a lot of economic data around last week, in particular inflation and earnings data. Do you think an interest rate rise is nailed on next month from the Bank of England?
I think so. I think, well, first of all, the UK inflation is proved to be still very sticky. We're still over 10%, and particularly high relative to the US and the Eurozone, which has seen inflation come down already. And also wage growth is still elevated as well. So I think these factors suggest to us that the Bank of England will be pressured to deliver another rate hike in May.
All right, Janet, got to leave it there. Good to see you this morning. Thank you.
Thank you.
Still to come from the Guildhall on Ian King Live, the future of sustainable finance. I'll be joined by the former Chief Executive of BP, Lord Browne. Stay tuned. Welcome back here to the Guildhall at the heart of the City of London, where, of course, City Week is being staged, a gathering of the great and good here in the financial services sector. Just a reminder that the Prime Minister, Rishi Sunak, is holding a Business Connect event as he begins a charm offensive with corporate leaders. If you want to hear what the Prime Minister is saying and watch him being questioned by business leaders, you can scan the QR code on the screen right now, and that will take you over to Sky News Online. Now, as we mentioned earlier in the programme, the theme for day one of City Week is climate change, and in particular how the UK's financial services industry is supporting the transition to net zero. Well, joining me now is Julia Carboni. She is Director of the Natural Climate Solutions Alliance at the World Business Council for Sustainable Development. Julia, welcome to you. You better explain what the Natural Climate Solutions Alliance is.
Yes, well, there are a lot of words to unpack there, but first of all, it's an alliance. That means it's like a coalition of different stakeholders. We have around 60 organizations at the moment, and we have three groups. We have businesses, we have NGOs, and solution providers in the space of climate change. The main focus of the NCS Alliance is to catalyze demand for high-quality natural climate solutions purchased on the voluntary carbon market.
Yeah, so for the uninitiated, what is a voluntary carbon market?
So the voluntary carbon market is the place where buyers and sellers exchange credit, like a certificate that represents 1 ton of carbon equivalent that is being either reduced or removed, and they basically purchase that certificate and they own it. So there are a lot of discussions about how to report on it, how to put it in their inventory, but this is to say that the voluntary carbon market is not a replacement to what companies need to do within their own value chain in terms of decarbonization. Is considered a complement, an addition to, and it's a really good opportunity for companies to go beyond what they have already committed in terms of net zero.
And who do they buy these credits from?
That's a good question. There are a lot of players out there, so that also creates a little bit sometimes, I think, a headache, especially for companies that are starting in this business, trying to figure out how to invest, right? But there are sometimes credits can be purchased directly from what we call project developers, and other times there are intermediaries, just like in every market, right? So there are intermediaries that go out, take the credits from the project developers and make them available, sometimes with additional, let's say, additional packaging around, because they do some kind of reporting or they do some verification on top. But what we say is that not all carbon credits are the same.
Well, I mean, if I'm a big corporate, how do I know that the carbon credits I'm buying are genuinely going to be reducing carbon emissions?
That's the key question today. So what is important is that these credits have been issued by carbon crediting programs that are credible. And the credibility of this carbon credit comes from some kind of accreditation. So right now we have a platform which is Corsia that accredits the carbon crediting program that can offer credits to the airlines. And many organizations, even if they're not airlines, use this accreditation as a kind of like a quasi, global accreditation. But a few weeks ago, ICVCM, so the Integrity Council for the Voluntary Carbon Market, has issued the core carbon principles and the assessment framework, which in the next few months will help identify which carbon crediting programs and methodologies are of high integrity and therefore credible.
So the people who are selling these credits, their work is being properly audited?
Yes. Yeah, exactly.
And do you eventually see there being a sort of global standard for this, rather than the way that we have in the accounting sector? You have IFRS and GAAP rules, for example.
Yes, so that's exactly the purpose of the ICVCM. I have to say I'm a board member, so of course I have a stake in it. I really believe in it. The idea is that this is a voluntary carbon market, and we want the voluntary is a really important point, because it enables also innovation, new ideas, new experimentations, and so on. But still, even if it's voluntary, you need some kind of, regulations, and this is what ICVCM will come with.
And where's the take-up most strong right now?
So let's say the main type of credits right now are renewable energy and RED, which is the reduced emissions from deforestation and forest degradation. Actually, I would say it's RED plus, because they should also contribute to livelihoods and people. This is really important, and this is actually the main core of the NCS Alliance, which is to promote the voluntary carbon market of natural climate solutions. This is because we feel, it's known now, and IPCC, the panel for climate change, has also recognized the fundamental role that nature has to mitigate and adapt to climate change. So how do we finance that, right? We have a whole list of things we would like to do, but financing nature to that level is, at least for mitigation, is around 400 billion a year. Voluntary carbon market can play a really important role.
Very good, Julia. Good to see you this morning. Thanks
Thank you very much.
Well, don't forget to check out the Ian King Live podcast, which you can find by scanning the QR code on your screen right now. It's available where you get your podcasts, including the Sky News app, Apple and Google Podcasts, and, of course, Spotify. And don't forget to keep looking at our digital platforms throughout the day here on Sky News. There's a lot of live and breaking news there. My colleague Mark Kleiman has been busy over the weekend breaking a number of exclusive stories. Now, staying with the theme of sustainable finance following COP27, joining me now is Lord Brandon Madingley, former Chief Executive of BP, now the Chairman of Beyond Net Zero. John, good to see you this morning. Yeah. You've come hot foot from a panel discussion. What have you been talking about?
We've been talking about how to get enough money into the system to keep temperature rise down to a safe level. We've got to go from $1 trillion today to $4 trillion almost immediately. That's an enormous amount of money. It needs the right incentives, the measurements, and it needs a great blend of public and private finance. And I made the point that the thing about private finance is it comes with companies, and companies are the best vehicle in the world to deliver. And they've got to deliver against measurable outcomes. And so we've got plenty more to do. I've noticed in our own work, we've been at this now. We're investing $3.5 billion, and we do it against specific measurements, and that works like a wonder. And so much more of that has to happen. Much more incentive is needed as well, much more.
Is the capital out there? $4 trillion, a lot of money.
Capital's clearly out there. I mean, capital flows to the returns, and capital does not flow when there are no returns. Obviously, different returns for public finance, different returns for private finance. And a small gap makes a big difference. So it's all very well saying, we've got 20 billion for this, 100 billion for that. We need to make sure it's the right amount for the returns needed. And usually there's a bit of a gap, and it's a gap because sometimes non-financial things get in the way. All very well financing a wind farm, but if you can't connect it to the grid for 6 or 12 years, the finance is very, very expensive.
Well, quite. I mean, the other big challenge, I guess, is that we are in a rising interest rate environment right now. That affects the way that investors look at their returns over the medium to longer term. Is it more of a challenge right now to attract capital into this field?
It just requires the right returns. I mean, obviously, if you're going to make money in a money market fund, you've got to make a premium for that. If you're going to take a risk on something which is to do with energy transition or capturing carbon and storing it forever. So you need the right returns, and they are flexible against the cost of capital.
Yeah, exactly. I mean, that's a key point. So has the risk-reward ratio changed particularly, leaving aside what's going on with interest rates?
Well, I think the good news is that technology improves every day. Bear in mind, we have to apply it the whole time, and it gets better over time. So clearly, you can see that in wind farms and solar farms. I mean, compared with the way it was even 10 years ago, risks are down heavily. Risks are very high in areas of carbon management, which is the big thing we have to do. We have to get carbon out of the system, especially as we're burning oil and gas, and we will do so for quite a long time, because there is no choice. There's no choice because we spent so much time talking and not enough time doing.
Well, I mean, it's interesting you mention that, because, I mean, one particular field of technology is carbon capture and storage, which a lot of people looked at over the years, decided it was uneconomic. The technology, it feels as though we're getting closer to it actually being financially sustainable now.
I mean, the technology's been around a long time. I remember when I was head of BP, I mean, we used to circulate a lot of carbon dioxide and natural gas in Prudhoe Bay. In fact, one of the largest things, and that started in the 80s. So technology's there, cost is high. Cost is high, cost will come down the more it is deployed, but it needs help. Again, in BP, we tried to do this in 2006. There was a gap which the government was not prepared to fill. Nowadays, that gap is probably smaller. It must be filled by incentives.
Yes, just now you mentioned incentives, the right regulatory backdrop. What do you need to hear? I mean, it's not just a question of what you need to hear from the UK government. This is a global issue.
So I think we heard quite a lot from the United States government with the Inflation Reduction Act, the unfortunately called IRA. But that's a whole set of incentives. I mean, incentives are very good things. Taxes are also good, but in the US, incentives work better to actually push investment into things like carbon capture and storage, energy storage, these sorts of things, very important indeed. So we need to emulate that around the world. We shouldn't step back and wring our hands and say, gosh, that's bad. We need to do more of it around the world.
Is IRA going to distort the way that business decisions are made? I mean, someone said to me, this is effectively turning what looked like a marginal investment decision into a no-brainer. Presumably that, you must be hearing an awful lot of that.
That's correct, and I can see that day to day in the activities that we do at Beyond Net Zero. So yes, there is investment competition, but that competition can be levelled, obviously, if you do the right thing around the world. There's one thing which does get in the way, and that is what happens in the Global South. I'd say that the lack of trust between the Global South and the developed world is getting bigger and bigger because there is no delivery to help them adapt to climate change. And we need to fix that, otherwise the level of cooperation will get worse and worse, and people will put their money not necessarily where it has the most effect, but where politically they get the most points.
John, before I let you go, central London, there are demonstrations today being staged by a group called Just Stop Oil. What would you say to them in terms of how the business community is trying to lead the transition?
Well, look, I deeply appreciate the fact that people like to fix the problem by direct action, getting rid of carbon. I think we all would, but we can't. I mean, simply there's an awful lot of oil and gas being consumed in the world, and it's not just the UK, it's all over the world. And, you know, the amount is actually rising a bit at the moment, which is surprising, but it is. So my view is focus on how we can manage the carbon coming out of burning oil and gas. Focus on that, get the incentives right, and then over time, the amount of oil and gas consumed will go down. But right now, it won't.
Okay, Lord Brown, John Brown, always good to see you. Thanks for joining me.
Thank you very much.
Well, a reminder that we're here in the Guildhall in the heart of the City of London for City Week. Now, it used to be said that the three pillars of the City of London were the Bank of England, the London Stock Exchange and the Lloyd's of London insurance markets. Well, the latter has been grappling in recent years with a number of challenges reflecting the changing nature of risk, whether that is climate change, the pandemic, the war in Ukraine and cyber security. Lots for the Lloyd's of London market to grapple with right now. Well, I'm very pleased to say that joining me is Bruce Carnegie-Brown. He's the chairman of Lloyd's of London. Bruce, great good to see you this morning. Clearly a lot of challenges for the industry right now, but what's really struck me is that demand for insurance and reinsurance is actually really buoyant just now.
Yes, it certainly is. I think we're getting pricing to a sensible place, which of course is then bringing more capital into the marketplace. But to the point you're addressing, I think the complexity of the problems we're being asked to insure is also causing us to spend lots of time and investment on developing new products as the risks of our customers change.
What about cyber security in particular? There seems to be a bit of grumbling from some of your customers that it's being excluded from some policies.
Well, what we're trying to do is get our arms around cyber risk. One of the brave things the insurance industry does is put a price on a risk it doesn't yet fully understand. And this is, of course, an emerging and developing risk for our customers and for us. And so over time, as we understand things better, we're trying to compartmentalize the risk and make sure, of course, we put enough capital behind those risks so that we can pay our claims. And so the thing that's slightly unnerving our customers is we're asking customers to separate state-sponsored cyber risk activity from what we'd call business as usual cyber risk. And what we don't want to have is, for instance, domestic companies that are not at risk from state-sponsored cyber attack paying for that cover if they don't need it. And so we're asking people to separate those things into two policies. A bit like in aviation, we separate all risk policies from war risk policies in aviation. So customers can buy the covers, but they just need to be specific about the covers they're buying. And we think that creates a better product.
Is there sufficient capacity in the Lloyd's market now covering cyber risk?
Well, it's an issue that preoccupies me. We underwrite 20% of all cyber risk insurance that's done globally. In truth, not enough people buy it yet. It's an underinsured risk. But we have to think about our own risk appetites in context of our capital. So it's our fastest growing line of business at Lloyd's. I think that will continue for some time to come. And we want to put ourselves in a place where we can continue to support the growth in that market and demand from our customers. But it does mean being smarter about the way we evaluate these risks and the capital we allocate to them.
Now, the first big theme today, day one of City Week, is climate change. I mean, fair to say, I think the Lloyd's of London market was pretty quick onto climate change as potentially risking the financial system and the stability of it.
Well, I think that's right. So I think our position is we're already underwriting the impacts of climate change. The biggest part of our capital is allocated to natural catastrophe risks around the world, and we see the increase in the severity and frequency of those risks. So we're already invested in this. And again, back to the earlier comment, we need to manage these risks as they develop and evolve. So we needed to get onto it quickly.
Is there much capacity for innovation in terms of how you help customers mitigate the risk of climate change?
So we're doing a lot of investment in that, particularly in new technologies that should potentially deliver sustainable energy alternatives. A good example would be hydrogen. I mean, arguably one of the most sustainable energy sources, but what we also know about hydrogen is that it's enormously combustible. So we've got pilots running in the Lloyd's Innovation Lab at the moment to try to understand the risks of hydrogen and to see whether we can put insurance products behind that. Another good example would be carbon credits. People are increasingly interested in carbon credits. Now, can we ensure the performance of those credits to give more confidence to our customers in using carbon credits to offset their risks?
Yes, you mentioned the Lloyd's Innovation Lab. A lot of people may not necessarily know about this. How long has it been running, and what sort of numbers do you have working in it?
So we've about 4 years into it now. We typically have a cohort of some 10 innovation businesses, typically small businesses, either selling an idea or a service or looking for insurance capacity behind a product. We're now in our 9th cohort, so 9 multiplied by 10. We've had 90 businesses come through, and a number of them have moved into scale-ups and attracted capital to support them. Parametric insurance has been a product that's been quite heavily developed in the marketplace. We have a business called Parcel that started actually as a sensor business going into shipping containers. It became quite important in the vaccine program around the pandemic for keeping vaccines at a stable temperature when they were being exported to particularly tropical environments. And that business is now a syndicate at Lloyd's with insurance capital to support insuring those risks, for instance.
And how are you incorporating things like AI into what you do?
Well, we have a number of syndicates now at Lloyd's. They're typically still follower syndicates that are using algorithms to price risks. And we've seen quite a lot of that in the broader retail markets. You think of price insurance now being done through price comparison websites and going into algorithms to price your motor car. The challenge is that even though we've been underwriting earthquakes for 200 years, putting algorithms around them is quite hard. But we are seeing more algorithmic capital being applied in the marketplace. And of course, we're quite interested in exploring the risks presented by AI as well. So, you know, the most obvious example being motor cars. The risks move from the individual to the manufacturer once you start doing self-drive vehicles, for instance. And so understanding how those risks change and providing product to support those risks is really important to us.
Now, away from the excitement of City Week, the CBI is engulfed in scandal right now. Lloyd's of London on Friday, I think you announced that you were pausing your involvement with the CBI. What needs to happen there, realistically?
Well, I think they're doing the right thing. They have to pause, re-examine the issues, re-examine their purpose, re-examine the resources that they have, including the people they have, and rebuild from scratch. And as you know, reputation is very easily lost, very hard to regain. So I'm afraid it's going to be hard yards for them. And we should all want to be supportive of a strong lobbying group for the private sector in this country. But it has to have firm foundations. And I think it's starting from scratch again now, I'm afraid.
Okay, well, before I let you go, you also wear another hat, which is President of the MCC. Hey, are you confident for the Ashes this summer?
Growing in confidence. Why wouldn't you start that way? I think it should be a fantastic summer. If we can have good weather, I think it's really set up to be very exciting.
England going to win then? Come on, got to push
I'm all there. I'm signed up for that, certainly.
Well, it was a thriller at Lord's yesterday, of course.
It was, Middlesex winning their first championship game yesterday. Didn't look likely earlier on in the week, so it's terrific. And again, at MCC, very supportive of Middlesex's success.
Very good. Bruce, great to see you this morning. Thanks for sparing the time. Thank you. That's it for me for today from the Guildhall. City Week is going on all week long. There'll be much more coverage of it here on Ian King Live over coming days. And of course, there's much more on the Sky News mobile app and on the website with the reporting, video content and analysis from our business team. Well, I'm back in the studio tomorrow morning. Bit of a shame, actually, because it's very exciting here. You can feel the buzz. But we'll have lots of guests for you. And again, as I say, more on City Week. Do stay tuned after this short break. Paul Kelso will be among the commentators on the PM Speech to Business. See you tomorrow. Cheerio.